Welcome to Stock Market Today. I'm James, your host. Today, we're diving into the mixed sentiments of the stock market, characterized by high volatility and some dramatic price swings. Joining me to unpack all of this is Thomas, a macroeconomist with a keen eye on market trends. Thanks for being here, Thomas.
Thanks for having me, James. It's a pleasure to discuss the current market situation.
Absolutely. So let's start with the overall market sentiment. The S&P 500 ETF dipped slightly by about 0.1% today, which seems to reflect some uncertainty. What do you think is driving this mixed sentiment?
It's been a classic tug of war between bullish and bearish forces, James. Investors are navigating through a landscape filled with both promising gains and significant losses. We saw impressive surges in some stocks, but overall caution remains due to economic uncertainties.
Speaking of gains, some stocks really stood out today. For instance, we've got INBS skyrocketing by over 77%. That's quite a leap. What's behind that kind of performance?
That's right. INBS's jump is likely tied to positive news or developments within its sector, which can really excite investors. When there's optimism or strategic advancements, we often see a surge in stock prices. It's a reminder of how sentiment can drive market movements.
And we also saw NCL and ANGH with impressive gains, right? What can we make of their performances?
Exactly. NCL climbed by about 70% and ANGH by over 60%. Like INBS, these stocks probably benefited from factors like recovery narratives or new innovations that investors reacted positively to.
On the flip side, we had some serious losses as well. ILLR dropped dramatically by almost 82%. What kind of issues lead to such steep declines?
That's a significant drop, and it often indicates underlying issues such as negative news or disappointing earnings. When investors lose confidence, it can trigger a mass sell-off, which we clearly saw with ILR.
And Court, with a fall of over 46%, seems to be in the same boat. What should investors take away from these kinds of movements?
Investors should be wary of sectors sensitive to macroeconomic changes. When a company posts disappointing results or faces external pressures, it can lead to swift declines. It's essential for investors to stay informed about the broader economic context.
You mentioned sectors earlier. Can you elaborate more on the sector trends we're seeing?
Certainly. The technology and healthcare sectors showed resilience today. Stocks in these areas often thrive on innovation and favorable market perception. However, sectors like consumer discretionary and industrials faced pressures, highlighting the ongoing volatility.
So it sounds like there's a lot for investors to keep track of. What would you recommend they do in light of this mixed sentiment?
Investors should focus on strategic decisions, balancing optimism in growth sectors with caution in more volatile ones. Staying informed and agile in your investment approach is key.
Thanks, Thomas. Before we wrap up, what are a couple of key takeaways for our listeners today?
First, keep an eye on sector performance as it can provide insights into where to invest. Second, be prepared for volatility and remember that market sentiment can shift quickly. Lastly, always stay informed, as knowledge is your best tool in navigating these turbulent times.
Great insights, Thomas. Thank you for joining us today and sharing your expertise.
Thanks for having me, James.
And thank you to our listeners for tuning in to Stock Market Today. Stay informed and make wise investment decisions. Until next time.